WFS up. So let's look at SAU on daily time frame. The reason we settle for daily time frame is there is something going on with the current price action at this level, and I've looked at it on 4 hours and decided that the best thing is to return back to daily and stay on daily, both for daily buy and daily rejection. Because if you don't do that, you're going to miss out in a lot of market reaction. So let's look at the price movement from the beginning because it looks like I did a chart on BTC market cap. BTC market cap show a drop from 3.7 trillion to almost 3.2. That is liquidity relocation, meaning the whales relocate their liquidity. So what that means is that nobody knows where that capital inflow, and they will check commitment of trade. Commitment of trade is closed, and they will open Monday to show us data on commodities. So this is what we have, and we technically see how price bought at that level is a bullish channel, a bullish ascending channel, where price have set up a strong higher high, higher low, higher high, higher low. Higher higher low, higher high, higher low, higher high, leave higher low and create on a new higher high at that level. Now, why is this important to us now? Let us find our if on daily time frame. This is an ascending bullish channel and price deviated in the normal fashion of creating higher high, higher low, higher high, higher low. Price created higher high there. It came down higher low but failed to break the previous high. It failed to break the previous high. So technically it went into consolidation. This is an uptrend. Market within this phase went into a bearish consolidation. It's not rectangular, it's bearish. And when we look at it from the daily candle, we see that there was no reason to try to sell Friday candle based on the structure and based on sharp EFS of strategy. That Thursday candle broke above the supply roof. If you look critically, you will see that the candle has been pierced, and Friday candle was a continuation of the bullish leg. So what we see there is a classic break and retest. And if you check on 4 hours, price came back to retest that roof. There was a retest to that roof during the non-farm payroll data print and employment claim. It was like a miracle. Price sold down and got up. The reason price got up is because price already broke out from the descending channel. And what we see in coming days is that there might be a possibility of a further push up, then price will come down for retest and it will make its way from there. So now we are going to clone our structure, and you can see that this bearish channel has been completed, and we are going to make use of our existing dots. Price came back here, demand floor, And the next move was a fake out, which broke out of the structure, and the price came here, returned back to the bearish descending channel, and another touch, and finally is off the hook. And when you look at it again, we have another touch to the roof, making a descending trend line. So we have our DTL and we have our ATL. So on this side we have two ATL and two DTL. So both of them are making the roof and the floor. So here on technical, we have our roof and we have our floor. So now let's see how we proceed from here. So this make up our floor and the other one is our roof. Now there is a breakout from the descending trend line. And when we look critically again, we see that 2,656.51 is a highly contested level. It's highly contested in the sense that after price mess up structure, not really messing up structure, the market went into a bearish consolidation in a descending channel. So I must state this categorically that this is actually what happened. Because some of the things we label wrong names are our own inexperience. And when you look at these two black lines, the roof and the floor, market decided to create a descending channel. It's bearish because it start changing after price create a higher high here, give me a high low, but the next high failed to break the previous high. So as long as that has happened, it has failed to meet up with the characteristics of uptrend. In the past, what we have here is higher high, higher low. The next high is greater than the previous high. It came down and created a new high. But in this case, that is not what we have. It started consolidating. And if you check, we have not had any major cross after price hits 2,713 on daily close. We have not had any candle close above this level. And when you look here, you will see clearly that there is a bridge from the breakout structure at this level. So when price came close at this level, you have maintained this level. You do not find a body of a candle closing below above 2,716. So thereby stating that this is consolidation. No clear trend has been established yet. For a clear trend to be established, we want price to set up characteristics of uptrend. What is the characteristics? Higher high, higher low, higher high, higher low. That is what we want to see on a daily time frame. On intraday, we might have some contradictions, but on daily, we want to see candle demonstrate that higher high. At least we want to see it. We want to see it. 1 week is past, 2 weeks is past. We have failed to see a new higher high. That is consolidation. Now, if you check, price have broken out from that consolidation structure. You look at it, the two descending trend line. The two descending trend line makes a bearish channel. There is a breakout on Friday. And to back it up, if you check on intraday 4 hours during fundamental analysis, market sold down and bought back. The reason market sold down and bought back is because there's already a breakout from the trend. So market respected that structure. And when we look at it again, there are other things that are pending, which we must pay critical attention to. At this level, we have a strong breakout. And at this level, you see that if you go back to 4 hours, if you go back to 4 hours, you will see a clear candle breakout at this level. You are not going to see wicks on these 4 hours, on this very structure. On 4 hours, what you will see here is demand floor, breakout of a demand floor, price sold out. A broken demand floor becomes a supply roof. On that principle, market sold out to return and fulfill the floor of the descending bearish channel, and market has moved up to fill the roof. Remember the characteristics of channel. It has to touch the floor, it has to touch the roof, it has to touch the floor, it has to touch the roof. And regardless of what it passed through, it managed to reach the roof and break the roof. Because what? This is an uptrend market. The market is uptrending. And when we look at it again, there is another break of structure at this level where price we have here, I'm going to change the color to blue. Here we have after price creating a new high at 2000. Let's take note of this new high. It's not like anything is going to happen here, but one thing for sure is that you are going to set your sell order at that level. Price will definitely respect this level. Price will definitely respect it. At least to respect it with a 50 pip, 70 pip, or 80 pip, but will definitely come back and break it. That is one thing that is sure. The reason is because it's a trap, it's a sell trap. While other traders might call it a bearish order blow, I call it a bearish trap because market makers know that retail traders are fond of marking zones where market has reacted. And we live by the logic that market buy where others are buying and sell where others are selling. So what makes market unique is the ability to invalidate your analysis. That is what makes market the greatest. No matter how intelligent you are, the market is going to drive you. So because the market makers know that 2,788, 2,790, a lot of people have placed a sell zone at that level. The idea is to turn them to a buyer. But before that will happen, it will first of all create some level of intoxication. When price gets into this level, it will respect the structure and it will go down. It will go down by 60, 70 people, or even 80, even up to 100 people will surely break it and go. If it doesn't break it that day, certainly the next day is going to break it. So it's very to be mindful that when price gets into this level, don't be intoxicated because it's already a sell trap. Will price respect this area when you have a sell order? Yes. This is even a high. No investor, no investor is willing to buy gold at this price, except there is strong institutional liquidity that is coming. And we are seeing the crypto market cap is dropping. The crypto market cap, if you go and check, is dropping drastically. So a lot of people may be pulling their money out, investing in US government bonds, and possibly some are putting their money in yellow metal and silver. So these are things we begin to see capital flow. So if we see capital flow leaving some areas and going to another area, it's an indication there is a pump. So nobody can tell this thing until you look at commitment of trade and see the balance and imbalance in commodity market. We must check it to see who is buying, who is selling, who stockpile, who wants to stockpile. We want to see that because retail traders purchasing gold does not move the price of gold. It's only institutional buying. So we also try to see what various gold merchantiles are doing. We look at their structure and see their data. So at the moment, maximum care must be applied until we see if it's possible that price will actually do what we want it to do. Because here we have here as a strong area of support. This thing, mm, so this is what we want to see. And at this level now, so we have here as a demand floor and price returning again as another demand floor. And and we have here as a break of structure and a retest, and I expect price to come back here. So what does this mean? That the market is coming to break this roof, this 217 roof. If you check, this is where the body of the candle closed on that day. It's slightly above it. The body of the candle closed at 2721, but the week extended beyond that. So that's also an important area that the trap will start. So the sales trap starts from this level, and the range of this reaction is 21 to 26. That is how that market reacted. So the sell zone reacted from 21 into. So I'm going to market. It's not like I expect anything to happen here. But well, we cannot be pessimistic. Market might come at 27 like it reacted before and react again based on what buyers and sellers are willing to pay for yellow metal on that day. So if there are orders that are not willing to buy gold on this day more than this price, honestly, there is nothing anybody will do. Price will drop again from this level. So it becomes a psychological benchmark for the price of gold. After all, oil has been doing the same. Every time oil gets to 64, 65, they buy it back, meaning that buyers cannot buy oil more than that price. So buyers can decide to cap the price of gold. If they cap the price of gold, it means they don't want gold to pass 2,727, 2,720. So it is possible that price will get here and drop. If you look at what price has done after break of structure at this level, price came after this is a demand floor, break of a demand floor, price came retest one, retest two. So that is a message. They might be creating a cap for the price of gold. That is the maximum we can buy gold. We can't buy gold more than this price. If that is the price gold sellers, bulk sellers want to sell, if they want to sell above this price, central banks, commercials, big dealers might decide they don't want to buy. That's the meaning of this chart. So it's not a playing something. It's not a child's play. So you see, now price are broken out from this descending line. It's an indication that liquidity has come and it broke out from the structure and retested it. And if you look critically, you will see what price have done here. We create here a supply roof. We create here another supply roof. So this is another supply roof and a break of structure and price return. Some say it's a fake out. Well, this is not a fake out. This is not a fake out because if we had the trend line of the bottom and we clone it to the top, you will see this reaction occurring here. So it's not a fake out. Market has gone to complete the roof of the descending bearish channel. But to those who do not understand concept of market structure, they're going to call it fake out. I once said it's a fake out. But when we start looking at structure in depth, I realized it wasn't a fake out. The market was creating a descending channel. And that descending channel turns out to be consolidation phase to rest from the rally. Look at the rally. These are human beings spending their money. So it gets to a point they have to rest and decide among the money spenders, are we going to continue pumping money on this thing or should we stop? If they want to stop, then the market can continue to move sideways for a very long time to come. This is also very possible. That the market at 2,727, 2,721 could become the new cap for the price of the yellow metal. This is possible. For price to move beyond here, there has to be institutional liquidity injection into yellow metal. That is what it means. So now on daily, it's now we have broken out from the descending trend, showing that liquidity is coming. That's the meaning. Showing that liquidity is coming. But as much as we are shouting liquidity is coming, now we have a roof and a floor. This becomes our new roof, and this will be our new floor. Now, in both cases, now we have two floors here. We have two floors. The first floor is a descending channel, which I use black to represent. Now, the next roof and the next floor, I'm going to change the color. I will change the color to let's use a yellow. Let's use yellow color. So this now is our new roof, and this is now our new floor. So this is now our new floor. So it might be that market makers may decide that this is how they want to play. That the maximum they can pay for good is 2,727. And at that rate, they start to sell. They cannot buy more than that. And when price comes to 2,556, they might decide to start buying again. So we have created a broader channel and also create a stream channel in the broader channel to accommodate the sentiment and emotion of buying and selling because it's an emotional thing. Somebody brings out $500 million, $1 billion to invest in yellow metal. He does so to make gain.